Hello. Hi. I guess you can see me here right now. My name is Bobby. I'm the co-founder of CoinGecko. CoinGecko is the largest independent crypto data aggregator in the world. We are based in Kuala Lumpur, Malaysia. So I'm calling in from KL right now. I'm very happy to be able to join the conference here today and to present some of the things that we have done in our research arm for a report. So I can see all the stuff that you are talking here. So the general chat, I'm observing it. If you have any questions, just feel free to ask there. I have 20 minutes of presentation here, and then we have 5 minutes of Q&A at the end where you can raise your hand and ask question later on. Without further ado, let me just jump in right straight to the presentation. This is a Q1 crypto report that we published about 1 month ago. Basically looks into the crypto market, and I just want to share with you some of the insights that we had. So this is a 55-page presentation. The report is 55 pages long, but I cut it short, and it's about 20 pages for this presentation that I have today. So I just want to share like some of the results that the research that we found, and this may be a bit. Some of you already know. Like this is the crypto market. Everyone knew that Black Tuesday, I think, happened on March 12th, and where the market crashed 40%. We thought the market actually performed really badly, but actually only performed slightly negative 5% in Q1. We all know by now that the losses that happened in Q1. Where Bitcoin was trading about 3.8K is now trading at 10K at this point in time USD. In terms of Q1, the top 5 coins that performed really well was Bitcoin SV. Actually, it had a huge spike at the start of the year, 350% increase, mainly because people thought that Craig Wright had the private keys to Satoshi's coins, and the idea was that he would sell Bitcoin to buy BSV. Obviously, that was not true. He didn't have the private keys, so BSV price declined subsequently after that. Everyone else was sort of didn't really did too badly. Bitcoin, despite its 40% decrease in price, only decreased 11%. We all know by now it's gone up. I think the exciting thing about Bitcoin is that halving is happening on Monday or Tuesday, and that's the key driver for the price. In terms of Bitcoin dominance, this was at the end Q31st of March. Bitcoin saw its dominance decrease to negative 3.5%, to 68% amount of top 30 coins. By now, we know that Bitcoin price in the last 1 month, in April and mid-May, has gone up a lot, and altcoin has not really followed through, so the dominance of Bitcoin has increased as a result. Also in Q1, so these are top gainers and losers. I'm going to highlight some of the gainers and losers. So we all know BSV was one of the big gainers. The second biggest gainer was OKX, OKB token. So this was mainly because of OKX launch of OKChain testnet, as well as a large reduction in supply, where they decided to burn 700 million OKB, which has yet to be issued. The big decrease in Q1 actually was Cosmos and Maker. Cosmos suffered a huge departure where Jay Kwon and Zaki Mania had a big dispute, and whenever co-founders argue, it's always bad for startup because startups generally fail, and this was reflected in Cosmos price falling 50%. Maker went 33% down because of the Black Thursday event, and a lot of people they had losses with DAI pack and all. So I just want to bring you some of these insights that we shared in terms of the exchanges. So we saw that Binance, this is a derivative market, and what we saw was that in terms of Bitcoin perpetual swap trading volume, Binance now has the largest trading volume. So it wasn't the largest one. Now it has 38% of trading volume for these top 6 exchanges. BitMEX used to be the biggest. It's now no longer the biggest for Bitcoin perpetual. It's only 33%. The rest kind of saw its decline as well in terms of market share. Everyone losing to Binance as a result. In terms of open interest, BitMEX is still the leader. It still has 47% open interest, but Binance is increasing very rapidly, 18.4%. The rest was sort of stayed the same. I think FTX had a big increase, increasing in 7%, for increasing by 7.4% in terms of its open interest. By BitMEX obviously being the big loser, but it's still the leader in the space. So I think it's interesting to look at this derivative market and see how things move on towards Q2 and Q3. What I think will happen is BitMEX is losing a lot of goodwill in the industry. I think they've been a leader in the derivatives market space for the longest period of time. That's because there was no competition from the market. I'm just checking out with the chat here to see if everything's real. Video is not full screen. I'm not so sure if everyone else is facing issue. I'm just going to continue here. Yeah, in terms of open interest, there was a huge decline. $500 million went down in Q1. Obviously, on Black Thursday, on the 12th of March, you can see the open interest went from about $1.5 billion to about less than $1 billion in terms of all exchanges. So this was a big thing, a big decline for the derivatives market. In terms of crypto exchanges, and I'm going to look at the spot market per se. So we all know that a lot of exchanges are faking their volume, they're wash trading, and we don't really know what is real and what is not real. So to kind of get a good idea, we sort of use Bitwise, top 10 real volume exchange, which they claim to be real, and then we sort of plot together a chart of trading volume. And obviously, it's not the best indicator, but it's some indicator. There are other exchanges that are not that have legit volume that is not included in Bitwise due to reasons known to them, and the report is over 1 year old by now. And there are some exchanges that is included here that we know, for example, as we purchase, like Poloniex, for example, is now owned by the Tron Foundation, the Tron team. So what we saw was that trading volume has been pretty much static, except for 11 and 12th of March, where it's no longer, you can't even put it onto the chart. It was way above the chart, close to $12 billion US. But one of the big thing was that in terms of these exchanges, we saw that Binance dominates like 50 to 75% of real spot trading volume. It basically has like significant trading volume among all exchanges. And this is, we look at the similar web traffic estimate as well. We took the top 20 spot exchanges based on CoinGecko's trust score, and we look at their similar web traffic. What we saw was that Binance had like close to 30% of market share in terms of all trading volume. This was almost 4 times larger than any of the other spot exchanges combined. So Bittime is 6.3%, Coinbase, Upbit, Kraken. This wasn't always the case, but this is what we saw in Q1. But the sum of January, February, and March web traffic is significantly larger. BitMEX gets a lot of traffic, about 15%, but they're nowhere near Binance as well. So all right, yeah, I'm going to continue here. So just this is a slide on crypto exchange tokens. One of the things we saw in Q1 was that crypto exchange tokens seem to be weathering the storm relatively well. In Q1, it went up on average 25% among the top 7 crypto exchange tokens. Everyone did really well. OKB was the biggest gainer. No, KNC, Kyber Network, was the biggest gainer, 136%, followed by OKB. Huobi did pretty well as well, 20%, mainly because he also followed the burning. They burned some tokens as well. So everything kind of followed the Fcoin exchange, where they burned their token. This exchange is no longer around. Is shut down, but they burned a large amount of tokens, treasury tokens. OKX follow, Huobi token followed, and the rest. Binance was the one key token that didn't really do as well. It went down 8%, mainly because of the Black Thursday, but everyone else sort of had a big increase. So it's probably something to watch out for, I would say. In terms of traditional market dynamics, so our team at CoinGecko actually put together some of the stats that of the traditional markets and kind of correlate them to what we see in the Bitcoin market. So this is over a 1 year period from January 2019 to March 2020. We plot Bitcoin, Ether, Gold, S&P 500, and oil onto a chart. So what we saw was that Bitcoin gained the most from 1st April to 31st of March. So it gained 56%. Gold followed closely behind, 24%. But during this period, Ether went down by 7%, S&P 500 by 10%, and crude oil was the biggest loser, going down 67%. The COVID-19 pandemic erased the entire stock market gains of 2019 pretty much. So what we saw was that we did a correlation as well. Is this not correlation? No, this is the gains between Q1 2020 and Q1 2019. So gold gained 4.5% relative to last year, where it only gained 1%. Ether gained 1.4% this quarter. Bitcoin lost 11% this quarter. But I mean, 11% loss is a lot, but it sort of hide the intraday loss of 40% on the 12th of March. S&P dropped 20% and oil dropped the most, 67%. So one of the things is the theme was that gold is known as a safe haven during past financial crises. Has always been the case. So we look at the 2007 global financial crisis. Red is gold price, blue is S&P 500. So when gold went up in price, when S&P 500 went down in price, we see gold price remaining steady and going up. We see the same thing happening in 2011 as well. S&P going down, but gold having an inverse correlation. Same thing in 2015. S&P going down, gold sort of maintaining. But one thing we saw a huge difference was in 2020, where when S&P 500 went down, gold went down as well. The correlation for gold S&P 500 5 years was 0.7. So yeah, there was a positive correlation between the S&P 500 and Q1 2020. Everything else was a short-term negative relationship. But over a long period of time, like if you look at the 5 years trend, gold and S&P has actually quite a close correlation of 0.7 over a 5 years period of time. It's just during the short-term period, during economic crisis, it generally performed in negative relationship. But during this financial crisis, it was in a positive correlation. So a lot of people in the Bitcoin industry believes that Bitcoin has is a safe haven. Bitcoin is a safe haven as well, and compare it's a form of digital gold. We did a Twitter poll, where we saw that 63% of respondents believe that Bitcoin is a safe haven. But is it really a safe haven? And what we did was we did a Bitcoin 1 year correlation, and we saw that it has a 0.6 correlation with gold. It actually is quite correlated with S&P 500 as well, as 0.53 correlation, positive correlation. I mean, Bitcoin Ether obviously is very closely coupled, 0.75. And if you look at the longer trend, Bitcoin gold correlation is 0.5 over the 5 years period as well. Bitcoin fell 37%, while gold remained as a safe asset, falling by only 1%. This probably suggests that there is some sort of decoupling happening during this period in time. So gold contracted 1% during this 30 days post-COVID-19 panic. It performed better. So it went down 1%, but if you look at Bitcoin 2020, it went down 36.8%. So this was a big difference. If you look at 2008, gold went up by 5.3% during the crisis. I don't have the Bitcoin stats right here. S&P, as you know, right here. So Bitcoin has a high 30 days positive correlation to S&P 500 at 0.9. It's much higher than the 0.6 correlation to gold. So what it's saying that is that during this financial crisis, Bitcoin is very closely correlated to S&P 500 relative to gold. It wasn't always the case. Bitcoin was more closely correlated with gold previously. So this is a trend which we kind of see whenever, and it's a trend I'm observing as well lately. Whenever S&P futures are trending upwards, Bitcoin kind of have a tendency to move up as well. And whenever the S&P 500 is trending downwards, the futures, Bitcoin goes down as well. So Bitcoin price, to a large extent, is quite driven by S&P 500 these days. But if you compare the market performance of Bitcoin against S&P 500, Bitcoin has recovered completely from its fall during the COVID-19 crisis. If you look at price today, but S&P 500 is still struggling to get back to its peak in mid-February. So yeah, it's something to consider, mainly because I think institutional investors are getting in. A lot of institutional traders are trading on the CME Bitcoin futures. So that's probably something to take note of. So yeah, that's all that I have for the presentation today. This is a short snippet of the full report. Every quarter we publish it. So if you're interested, you can take a look at the full report here. And also thank you very much for listening here. There's a $5 promo code for you to get like some CoinGecko swag, t-shirts, or the Tumblr or a book that we just published called How to DeFi, store.coingecko.com. Just use the CoinGecko 5 promo code. What I will do is I'll click on this link and share in the chat, and I think I'll be open to Q&A. So ask your questions or feel free to raise your hand and ask me questions. Yep.
Hi, Bobby. Thank you for the great presentation. So I have questions for you.
Yep.
I noticed your slide for on gold and S&P and their relation with crypto. So do you see any kind of correlation that we can predict for the future, or so far for the past 10 years, what kind of correlation have you seen? And also, what do you think about like halving coming up? Is that going to impact the correlation between all the three, gold and S&P, and probably COVID also?
Okay, so basically the question is, what do I think about the correlation between Bitcoin, gold, and S&P 500, and what's the impact on the halving, which is happening in a few days' time, right?
Yes.
So I think this relationship between Bitcoin and gold generally has in a long-term trend point of view, it has a positive correlation. But during periods of financial crisis, during periods of high volatility, it may break. So what we saw was that the current crisis, like Bitcoin went down 40%, like during the February to March decline, but gold kind of stayed steady around 1%. Let me see this.
Yeah.
Yep. It's also hard to say because gold generally, to a large extent, goes in the inverse correlation with S&P 500 in all our previous financial crises. But during this liquidity crunch, 2020 COVID-19 pandemic, everything was sold off. S&P 500, gold, oil, everything was sold off, and gold went down in price as well. So if you ask me, is in the long term, everything is correlated to each other. Bitcoin, gold, S&P 500, they all has a long-term correlation. But in the short term, it's very hard to say because different financial crises have triggered different reasons on why the price may go up or go down.
Right.
In terms of halving, I'm very excited about it. Yesterday, we did a meetup for CoinGecko where we got some miners coming on board, and we spoke a lot about this at length. I like to think about the halving as Bitcoin having its birthday on the 29th of February, where you get to celebrate it once every 4 years. So last time we get to celebrate it was 4 years ago in 2016, and now we are seeing it. It's a big thing. So the supply of Bitcoin coming into the market to miners will decrease. Obviously bad for miners because their revenue is cut in half, but it's good for the long-term trend for Bitcoin. If you ask me for price prediction, everyone's really hyped on Bitcoin going up in price. Well, it did technically go up in price from March after it fell 40%. But if you look at January, like I think we are sort of pretty much the same level as where we were when we started the year. I think in the short term, a lot of people, we have this buy the rumor, sell the news, sell the fact kind of trend. So a lot of people are hyping on this halving, so the price is going up. I'm predicting there may be a short decline in price in the short term. And then in the medium to long term, I think that is a very good opportunity because what we observed in the previous two halving, obviously the sample size is small, is that price generally tend to trend upwards after the halving. And let's see, I think in 6 months to a year time, I think we'll be in good position. I think 2020 is probably going to be a very tough year for everybody, including Bitcoin price. And it'll be interesting to see what's going to happen in 2021. So yeah, I think if you have some extra cash, always keep a long-term horizon of Bitcoin because this is an asset class that will not disappear. It's always good to stack up some, but always put money that you're willing to lose because this is a very volatile industry. I won't be surprised if Bitcoin tests the 4,500 levels again after this halving because there is not much support after that. But then after that, it may go up Yeah, it's very hard to say, but those are some of my predictions.
Of course, and it's very hard to predict anyway. I totally understand. Um, Yeah. So just one more question, Bobby. You know how in 2017, every other like coin we saw on Coin Market Cap, the exchanges faked their volumes and everything, and it was really troublesome for people to gauge like what's going on in the industry and what exchanges to trust and what exchanges not to trust. I just want to know like what steps have CoinGecko taken in regards to represent the right volumes on the exchanges.
Yeah. So one of the things is we were running CoinGecko from 2014, and one of the things, I mean, in traditional market, an exchange that had the largest trading volume generally has the best liquidity, and we've been observing this trend for the past few years until sometime in 2019 when we started observing that 2018, 2019, a lot of the exchanges started faking their volume because they want to appear top on CoinGecko and all, and then to get more customers. This is not ethical. They out there trying to cheat people that they have the best liquidity in the market when they don't really have that. Initially it was just one or two, and then at some point become like dozens of exchanges were doing it. It becomes like a normalized thing, and we couldn't stand it anymore. We couldn't stand like looking on CoinGecko and having shitty exchanges appearing at the top. So what we did was we started to come up with an algorithm called a trust score, where we give like a green, yellow, red traffic light symbol to exchanges to determine which is a good exchange, which is not good exchange. We sort of determine that trading volume as an indicator is highly manipulated and is no longer a good indicator to rely on for liquidity. So what we say that we had to rely on other indicators. We look at the order books. We see which exchange has the thickest order book in terms of its 2% range. We look at the bid-ask spread. We see which exchange has the tightest spread. We look at the exchanges similar web traffic estimate, because if you are a real legit exchange, you probably have a lot of traffic coming to you, as we have seen from Binance. But if you are a fake exchange claiming you have the highest trading volume, you probably don't really have the web traffic to back it up. And we use SimilarWeb because it's a third-party tool, and it's harder for one of these guys to cheat any of this data aggregator. So we come out together with few of these metric. We put them together, kind of like an algorithm, and then we call this a trust score, and then we rank exchanges based on this. So it's like a score between 1 to 10, and where the 10 exchanges that get a score of 10 will rank at the top, pretty much.
Yeah, all right. Yeah, that makes sense. I mean, it's very important for CoinGecko to make sure the volumes are represented in a correct form. Yeah, yeah. Yeah, that's probably it, Bobby. I would like to thank you for joining the session. Yeah, and thanks a lot. I hopefully will invite you again for the next summit.
Yeah, it's great. I mean, Amit looks really awesome. Glad to be able to join.
A big shout out to Amit. Yeah. Also, just one last thing, Bobby. You mentioned when you were talking about the correlation between gold and S&P and crypto, you mostly talked about Bitcoin. Would you also present the same case for altcoins as well, for other altcoins that are not so popular right now, maybe further down the 100 range?
Yeah, so what we observe is that Bitcoin so altcoins have a strong correlation with Bitcoin. I think we saw Ether has a 0.75 correlation with Bitcoin. So pretty much the same correlation numbers will apply when you compare altcoins against S&P or gold or the others. Like it would pretty much be the same analysis of Bitcoin against the rest. Yeah, on a large level. Yep.
Yeah, makes sense. Okay, let me just take some questions. What I observed is during crisis, commodities like gold, crude, exception for COVID, increased exponentially. Yeah. So, what is your take on like COVID with regards to Bitcoin and other cryptocurrencies? We saw a 40% drop, while we see S&P keep rising to the north, and it doesn't really care about any crisis or unemployment all around the world.
Yep. So I think this current crisis is interesting, right? So S&P went down significantly in March, and then in April, the Fed announced that they are doing all kind of quantitative easing, and they basically they act very decisively and very quickly, and this kind of gave confidence to the market, and the asset prices go up, which is kind of weird because if you think about it, the US is, I mean, we are all on lockdown. There's no economic activity. Unemployment is at its all-time high in US. It's like highest in 80 years, I think. And yet the S&P is going up, which doesn't make any sense as well. So, which kind of makes me feel that, like, how much longer can the governments keep printing money before the whole thing start falling apart, right? And then it comes kind of ask another question, like, I mean, if the government can simply print so much money, then why are we paying taxes, right?
Exactly.
So which is actually very good and very bullish for Bitcoin in the long term, because the more that the governments print money, the more Bitcoin becomes valuable, because we know for a fact that there will only be 21 million Bitcoin ever being created. And we know that this can't be inflated away just like how our money is being done by the government.
Absolutely. And then the price, if they keep printing money, that only devalues dollar, like,
Exactly.
and with Bitcoin, it's the opposite case. It just keeps getting stronger. Yeah. Thanks a lot, Bobby. I think that's how much time you also have for us.
Okay.
Thanks a lot for the presentation and taking out time to speak.
Yeah. Come join the CoinGecko community, and look forward to seeing all of you.
Yeah.
Thank you.
Yeah, I'll end the session and I'll see you at the backstage. Yeah. Okay. Thanks.